Hey, welcome. Stick around because we're going to get into the difference between the cash method of accounting versus the accrual method of accounting. Be right back. Welcome back. If you are new, thank you for stopping by. If you're just a regular and you love this stuff, thank you for sticking with me. I need everybody to though like, subscribe, and hit that notification bell so that you can be the first when we drop new exclusive items at DEFY Consulting Group or drop something on YouTube. You know how it works, right? All right, we're going to get right into it. Hope you guys are doing good. We are going to talk about the main differences between the cash method of accounting and the accrual-based method of accounting. Simply put, cash basis recognizes when you get money and when you pay money. So the minute that I have to pay my cell phone bill, the minute that I have to pay the utility bill, the minute that I have to pay any kind of bill is when I recognize an expense. It doesn't matter if I pay it late. It doesn't matter if I pay it early. The minute that I pay it is when I recognize it in the cash basis of accounting method. So again, I do taxes. And let's say the person, I did their taxes on January 15th. They paid me on January 15th. Cash in my pocket. I recorded on my books. But let's say I do their taxes and they say, "Oh, Tonya, I'm broke. Can you wait till I get my tax return?" Even though I did their taxes on January 15th, they didn't pay me until March when the money came in. I can't record that in January. I have to wait until March when they actually give me my check. So, cash basis of accounting, I only record transactions when I receive the money or when I pay it. Switching over to accrual is a little bit different. This is used by more larger scale companies as well as publicly traded companies because they recognize accounts receivable and accounts payable. So for instance, let's say I get a bill in the mail on the 1st, but it's not due until the 15th. Well, I get the bill on the mail on the 1st, I have to recognize that expense on the 1st. It doesn't matter if I don't pay it to the 15th, but it's in theory when the transaction is incurred. So the minute that I receive that bill is the minute that I have to write it in my books. Now it may go as accounts payable, but I have to write it and acknowledge it when it's incurred, recognize it when it's incurred. So that would be a accounts receivable and vice versa, accounts payable. So let's also say that I have a service. I do accounting and I do your tax return today, but you don't pay me today for my services. You want to pay me when you get your tax return, which could be like 30 days later. In accrual, I will recognize that sale as today because today is when I incurred the expense. It doesn't matter if you don't pay me for another month or so, but I need to record it in my books and records for today because that's what the accrual method is. As we start scaling up our business, you probably want to switch over to the accrual method because it's the most commonly used because it recognizes your accounts receivable and accounts payable. The IRS allows you to use either method. You can use the cash basis of accounting or you can use the accrual-based accounting method. But the IRS says that you need to be consistent. So you can't just from year to year flip-flop. So if you are new and your business hasn't filed taxes yet on the first year, the IRS will ask you what method of accounting do you choose when you do your Schedule C or other schedules. And you can, again, choose the cash basis or the accrual basis. If in fact years later you decide that you want to get more sophisticated and do the accrual basis, then you have to fill out IRS Form 3115. So IRS Form 3115 is the application for changing your accounting method. So it is okay to switch, but you have to get permission by using IRS Form 3115 because we're all about consistency, right? So you can't have it one way and the other way because there's different tax implications for them both. If you are on the fence about which method is best for you, I have in the link below a publication that you can read or maybe even an article that you can read that can help guide you. This is your FMA, Financial Management Architect, Tonya Steel with DEFY Consulting Group. Stay tuned for next week because we'll have much more to give you. I hope you enjoyed this, and like I said it earlier, if you like what you hear, like, subscribe, and hit that notification bell right there.